What's going on, everybody? Happy Thursday. Almost forgot what day it was. Happy Thursday. Hopefully everybody's had a good day today so far. This is going to be, or I'm planning for it to be, a relatively brief stream. I just wanted to provide a little update here. Market closed not too long ago. And so let's go ahead and just consider a couple things. I'm sure you guys, if you have checked any of the charts today, you will have seen that, well, it's a bit of a red day. Pretty much everything here is selling off. And I just wanted to go over kind of what's going on here and then a couple different plays. So I'll recap my trade day, and then I'll also talk about just what I'm kind of expecting going into tomorrow, and then just a longer but still short-term view of things. Anyway, of course, don't forget, if you haven't already, hit that like button. Do appreciate it. If you don't already follow me, subscribe to the channel, and you can follow me on x.com. That's /2020 Tech Reviews for much more frequent updates, trade alerts, and just other valuable, important information that I find. I'll either retweet it or I just post on my own. So I appreciate all the support. Anyway, let's go ahead and get into it. So first things first, let's talk about the thumbnail. So as you've seen there, what I'm pretty much doing for thumbnails right now is, like I said yesterday, I'm being very transparent with my account. So nothing is really being hidden here. If you were here in yesterday's stream, I think we were closer to 9,000. Hey, what's going on, Professor? Appreciate the support. Welcome to the stream. I think yesterday we were sitting at around 9,000 on the account balance. Just to kind of, for those that don't know, most of my position size right now is comprised of Tesla. So I am bullish on Tesla. I am holding Tesla long, and that's my plan. I bought in at around 214. So I started off with this particular account. I started with about $3,000 in it. I bought in Tesla and some other things. When I bought Tesla, it was at about 215. I rode that up to about 250, and then I sold. I waited, and I think I bought back in at like 270, and I've been in since then. So then I rode that wave up from like 270 up to 370 a couple days ago. At that point, once it pulled back to like 350 or so, I sold my position, and that way I was able to take advantage of having more capital. And what I did is instead of holding shares, I went ahead and bought a long-term call option, because at this point I'm already very confident. Everything's pointing to Tesla being in a very, very good position, no matter what and we'll get into a couple things, but no matter really what angle you look at it from, there's no really better case scenario than having Elon basically in direct contact with the government and being able to have some influence on what regulations stay and go. So when you consider really the hurdles that Tesla has, which is potentially having someone to emphasize the importance of regulations for autonomous, and then getting rid of other regulations that could maybe hold the growth of EVs and autonomous driving back, really best case scenario. So then we've also got the robotaxi or cyber car, whatever you want to call it, that's to be produced next year, released 2027. There's just, 2026 to 2027. There's just so much here in the pipeline that Tesla is just a very easy, very obviously bullish mid to long-term play. So I'm long Tesla for that reason. So at this point, I've already made a plan. And it's very important, guys, as you know, and I've always said this, to plan your trades and trade your plan. That is key. So you need to start thinking of this stuff in advance so that when things start happening, when the market starts moving, you are in the right position and you know what to do. Because a lot of times, this is what ends up happening. When things are going well, when markets are going up, you just hold on to it. You don't sell, you don't take profit. When things are going south and you're like, oh my goodness, how much further down is this going to go? You sell. But what that ends up doing is it puts you on the opposite side of what you should be, where you should be. You're supposed to buy the dips and sell the top, not the opposite. So that's called emotional trading when you do that opposite. So having a plan in advance keeps you on the right side of things, and it keeps you from losing money. My plan here is I've got a couple things. Number one, I'm going long term on Tesla. That's thing number one. That's the first part of my plan. Now, the more detailed part of my plan is I know I want to have a position in Tesla. I'm not looking to do really significant position size day trades. I'm not looking to just take profit at every $10 level or anything like that. I want to be holding shares, and I want to be able to buy more. I want to be able to average down. So what I did was, once we got near this top here, and I could tell we were running out of momentum, I sold my shares. I had 54 shares that I had bought, not options, just shares. I sold those, got all the capital for it, and I bought a long-term call option with that. And that only took out, instead of me using 100% of my capital in Tesla, it gave me about 50% back. I actually doubled my exposure size to Tesla because a contract is 100 shares instead of the 50 I had. So now I'm in even more, but I also have some more money on the sidelines to buy the dip if things were to pull back. And so that was my plan. And I traded that plan. So we sold somewhere around here. Now we have a call option. Now, obviously, so what I bought was a 330 call, but I bought it somewhere here. So obviously, being that I bought it at like 350 and we're at 306, I'm in the red. And that's why you see that I'm down almost $1,000 on the day. But again, being that this was part of my plan, this is not making me feel any kind of way, because I had already agreed to the terms and conditions before this even happened, understanding that this would probably be an occurrence. The way that I played today, and there's some key levels that I've been talking about. We mapped this level out on our chart yesterday. I was looking at the 330 to just going down a little, maybe 328 support level here. You can see there's a couple different things, little wicks that you could be looking at, which were support before. I was looking for any signs that this would become resistance, because the way we were trading, right here, there was some evidence potentially yesterday of, like, just depending on how you looked at it. Well, actually, that's getting a little ahead of, I'll focus here first. But you could just see, once we ran up, we kept coming back to the support line and bouncing, and then, ricocheting here, coming back down, taking off even further, but we just kept coming back. And I'm like, okay. Once you start to look here, though, and this I found to be interesting, we formed a little bit of like a double bottom here. Big sell-off, and then we basically hit support again, kind of formed somewhat of a triangle here. Yep, a bit of a triangle here if you just look kind of like that way. And then same thing here. You can see there was a bit of a triangle. Didn't really end up becoming anything though. You could see here right towards the end, there was no break up or break down. We just started to lose trading volume, and you can see that also here. The candle size here is extremely small, but then even as you look right here at the volume indicator, you just see it pretty much goes non-existent. So there was not anything really happening here, and you can tell how badly the volume fizzled out right here, right? Like no activity whatsoever, extremely choppy. Candles are pretty much holding no information. But then, okay, a move up, big sell-off again, holding support. So it's just one of those things that you're just looking and you're waiting to see what's next. And sure enough, we sold under this support line, and then we hit that as resistance, and then we have a massive rejection wick here at what was previously support. So once we got to about here, and I'm seeing 325, 324, I'm like, all right, we're not holding 330. We tried for a long time. It's been a couple days. It's obvious that there's more people looking to take profit or go short now than there is people that are still super hype about what just happened a few days ago and looking to go long. So this is probably time for a mental sentiment flip. Now we need to brace and prepare for the sell-off, because that's probably what's happening. With that in mind, I had two options, because I already told myself I'm not selling my 330 call. I'm confident we will get back to that by the time it expires. I'm confident that will end up being profitable. I don't want to do too much, put myself in a position to fail. I'm going to hold my call, hold that 100 shares, hope for the best. I'm confident in it. But with the rest of my capital, I have some options. Do I look at another company to buy? Do I try and do something else with Tesla here? And so what I decided to do, since it looked like it was pretty obvious we're going to sell off, I just decided to buy a put. So I bought a put. When we were right at about 325, I bought a really short-term put that expires... oh, it's right here. So it expired November 22nd. It was just for next Friday. And this was just going to be a little play for me to make some quick money off the sell-off. That way I'm kind of hedging, with 100 shares. I have 100 long, so now I'm hedging this downside here with a put to counter my call. And so if I was correct with that put, that means that I'm able to make money off the sell-off, sell that put once I believe we're pretty much stopped selling, and then once I believe we're pretty much done selling off, and then get back in long with the dip buy that I've always planned from the beginning. So that's what I did. So I bought this put, and it was I was tired when I bought this. I was not really paying attention, and again, my mistake for doing something stupid. If I were really paying attention, I would have looked at the Greeks a little more. But the put that I bought did not have a super high delta. So that meant for every dollar we were actually going down, and every dollar that proved that I was correct about the sell-off, I was not getting very much money. So it really only net me about $200. But I mean, that's a lot of what a lot of people make in a day working full-time. So that's really not a bad thing. But I did make $200 with my $295 put that I bought. I bought it somewhere around $325, and I sold it at, I believe it was $313. And I'm not sure if this little Robinhood Legend indicator will tell me. But you can see here, I bought it at $249 a contract, and I sold it at $425. So I made some money off the put. Now, obviously, if I had continued to hold, we're at 306 now. I would have made probably another $150, which would have been nice. But I'm not short Tesla. I feel like this sell-off is a bit of an overreaction. And it's also very unpredictable with all the bullishness going on right now when the reversal back to the top side will actually happen. So I didn't want to overdo it and get greedy and then end up selling it breaking even, because I knew I wanted to sell it today or no later than tomorrow, because the theta decay was really bad. And so holding it for even a couple days would have pretty much made it impossible to make money. It was a pretty bad call, honestly. It wasn't, the Greeks were bad. So I took my profit, I made my $185 and call it a day. Now, as you can see though, as this price continues to sell off, my account balance is going to continue to decline. I expect tomorrow, if we're like 295 to 300 tomorrow morning, that I'm probably going to be closer to 7,000 flat here, which is down from, pretty significantly down from what we were a couple days ago. But again, not concerned about that. I have some buying power. I've got another $2,000 I could put into options. I'm probably going to add a little more capital to my account just so I can purchase a better option, because $2,000 doesn't get you a great call option on Tesla. I would like to have 3 to 4, so I can buy like another call that's longer term, kind of like my current call that I have that's April of next year. I'd like another one like April or later. So that's the plan. That's the play. So right now we're just waiting and watching and waiting. That's what it is for Tesla. I do want to talk a little bit about why Tesla is selling off so hard though, and why I think that this really truly is an overreaction. So I wrote a couple points down here just so I can reference it. So one of the reasons, I'll start with the obvious one because it's a little bit briefer. The most obvious reason is just because there was a significant up move, and that tends to need to be followed by a correction. A lot of this move was off hype because of the president that got elected and Elon's involvement in the government. So we had some significant move up here over the course of the last week, right? We've moved up pretty significantly. We were just in the 200s a couple weeks ago, and now we're at almost 400. There's definitely, we were due for a healthy pullback. And then there's just going to be a lot of people that were holding from a long time ago. Maybe they're holding from 100, and there's also some people that were holding from way back when, right? We've got some bag holders from when we were at 400 before. So getting back close to 400, a lot of people are going to exit their positions, and if they're not really confident anymore, they're going to close out their positions. So really not surprising that this is profit taking time. But the other reason, and this is the more less obvious reason that I wanted to highlight, is because Trump is supposedly, and this is the rumor that's going around being posted by lots of different sources, and also it's not unexpected, but Trump appears to be planning to cut the EV tax credit, which directly affects Tesla, right? Because what they really do is sell electric vehicles, and that $7,500 tax credit on new purchases is a really strong incentive for customers to buy. So when you decide, as the government, that you may take away that tax credit, all Tesla shareholders start to panic a bit, because the first thing you start to think of is how is that going to affect vehicle sales. Now we're going to have less of an incentive for people to switch over from ICE vehicles to EVs. And, this could potentially mean a sales decline for Tesla, which could mean a revenue decline, which is then going to, how it goes. Whenever there's bad earnings calls, there's significant sell-offs in the stock. And so for that reason, we're seeing also some panic selling. And that's what we're dealing with. Taking profit plus panic sell. So I think with those things combined, it's pretty easy to pull back to at least the 300 support level here, which is, we're only $6 off of that now. So I think that's pretty much a given, all right? And none of this is surprising. The reason why, I have a strong opinion against this sell-off, though, is because that's just like a knee-jerk reaction. It's the obvious reaction. It's one that you'd expect. But even as one, and I don't remember what the source was, but one article highlighted this, and they personally said that they believed it was a knee-jerk reaction, but in the wrong direction. Because it's natural that you would think those things and panic a little bit. But when you really think about it, this is not that negative. In fact, it could be like a break-even event, or it could even be a positive, depending on how you think about it. So one thing to keep in mind is Elon Musk has already said, that he does not think that Tesla even needs the tax credit. The tax credit was really beneficial at a time in the past when EVs, because they were so new, they were also more expensive to produce. All the technology was more expensive, the batteries, and then you also have to think about Tesla spending money for the charging infrastructure to get all that set up. The whole cost of entry for electric vehicles in the past was much more expensive. And so the vehicles, being a large part of that, they were also much more expensive to get a comparable vehicle that had a gasoline or similar engine. But now, years later, Tesla's been able to optimize a lot. Technology has improved. Things are a lot more accessible. And now the cost of entry to an EV is not that much different than getting into a gas-powered vehicle. So the need to figure out a way to subsidize pricing to incentivize people to buy is not as strong. Now, the only thing that the tax credit does, in my opinion, there's two different things. One, it kind of allows Tesla to be a little more flexible with their pricing and maybe a little more aggressive in a way that benefits them, because they can also then just say, oh, well, yeah, our vehicle is $50,000, right? Which might seem a little high, but you're going to get $7,500 back in the tax credit, or we'll take that off right off the top. And it's like kind of the sale gimmick. How whenever you say something's 25-50% off, whatever, it doesn't matter what it costed or what it actually costed before. But when people hear sale or discount, suddenly it's more attractive, regardless of the actual cost. So it was kind of that kind of thing. So yeah, that's a negative not having that anymore for Tesla's bottom line. Sure, we'll go with that. So that's really one of the main things. And so not having that, that's a little bit disappointing. But you really have to consider too, Elon said he already knows that at this point in time, it's not necessary to sell vehicles. He's pretty confident in that. And in fact, what it really helped do at this point in time, being that Tesla's so established, is it's helping these other manufacturers kind of join the party. Now that Tesla is really the established EV manufacturer, and there's really no competition. I mean, you look at Rivian, pretty new to the game. in comparison, but they're not doing so great. You look at Lucid, who's also relatively new to the game, but they're really not doing so great. And I will pull up their stock just so we can take a look. But when you look at the competition in the United States, it just really doesn't exist. And so it's like, yeah, for raw sales numbers, perhaps not having the EV tax credit will be a net negative for Tesla, but it's also kind of a net positive because now these other companies have less incentives for their vehicles to be purchased. And so, I mean, you kind of, when you're looking in the market for what to buy, if you don't have, incentives for these other companies that might be getting the tax credit. Tesla was already having issues getting the tax credit because of some of their batteries coming from China and not being US made. At the end of the day, Tesla is the top company. So, you know what I mean? Leveling the playing field for everyone doesn't really benefit the other companies. If anything, it just benefits the company that's in first place. I will pull up Lucid. All right, Lucid is a company that has a really good vehicle here. I don't know if you've seen, like, I think it's called the Lucid Air, and then there's different models of the Air, like I believe the Sapphire is the fastest one, but they actually have a car that's like the Model S, and the fastest version is faster than the Model S, and it's actually really nice. I actually looked at it myself as a potential consideration, but just look at how poorly they're doing. And this is one of Tesla's top competitors. Their stock price started out somewhere here around $20-$30. Sold off to 15. They saw all-time highs back in 2021 at about $60 a share. And right now they are trading at $2 a share. And it's not looking like it's getting any better. In fact, it has just been getting worse for the last years. Analysts and investors are at this point not even sure if this company is going to make it. And so this is what I mean when I say it's not all that bad for Tesla. This is Tesla's competition. It might hurt Tesla. It might be a slap, a sting for Tesla, but a slap or a sting hurts way more for someone that's already not in a good position. A kick when someone's already down, it's what's really brutal. And so these companies that have been trying to have any incentive to purchase their vehicle, losing something like $7,500 credit from the government, and then people having that less of an incentive to purchase an electric vehicle just means that your company that needed it more is seeing less exposure, seeing less volume, seeing less demand. And that's why these companies too are bleeding out. And so this is really worse news for Tesla's competition, which then is what makes it a little bit better for Tesla because the competition is getting hurt more than they are. Hopefully that kind of makes sense. So with that in mind, this is actually pretty disappointing. I'm not a Tesla fanboy, all right? I'm not a fanboy of any asset or stock or company. I did appreciate what Lucid was doing, and I like their car. So to see them doing this bad and it's not looking good, it's a little disappointing. Hopefully they're able to recover, and I think competition is just healthy. It makes for a better environment for all of us. Tesla with no competitors, they can really price the market, set the market pricing, because it's like, what's your alternative, right? That being said, I really feel like if Lucid is to figure out a way to stay afloat, that this is just an extreme oversell here, and that we could see a reversal. So with that, I'm considering maybe looking at like what 2026 or 27 calls that they have, and just putting, buying a contract or two if the options are relatively low cost, and just seeing what happens. Because even if I buy now and in 2027 they make it back to $4, that's 100%. There's just a lot of upside potential here if they are to stay afloat. So that's something I'm considering. But before I buy options, because I don't like to waste money, I also don't like to be wrong, I am going to continue to do a little more research on Lucid and really how they're doing right now, because I don't have a great understanding at this point of if they're in a position where they're like going to go bankrupt in the next couple weeks, or if they've got a couple years, or like what that's looking like. So no gambles, but I'm just saying this, if things are looking okay for them, then this looks to be maybe a value buy. So yeah, that's why people are selling. The market had a lot of green for multiple days in a row, and it's profit taking time. So that's primarily just what's going on here. Now, like I said, Tesla had the EV tax credit rumor that's going around now, so that's causing a sell-off. But I think that's a very short-sighted overreaction. I think this is actually going to, if anything, wipe out Tesla's competition and hurt them more, which then means this is actually more of a valuable move for Tesla at the end of the day, because they'll have less competition to deal with. And thank you, Sir Nilo, for the question. I appreciate it, and also welcome to the stream. So that's what I had to say about Tesla. Looking at Archer Aviation today, Archer's just kind of doing whatever it wants, and I don't have a really strong opinion in regards to which direction it's going to go in. So I had calls on this as well, and I did the same thing I did with Tesla. I did buy a put here towards the top, just in case it were to sell off. I bought some really short-term puts, and we'll just see. If we sell off, I'll make a couple dollars. If not, it was only a couple bucks for the puts, so I'm not really worried about it. Overall, though, if we were to look from a technical standpoint, their chart looks pretty strong. Their chart does look pretty strong. I mean, if you're to draw support here at the bottom, where they have hit the most over the last couple years, and I don't know why Robinhood is giving me this view. Let's try all time. Very weird, very annoying. Oh, there we go. If you just look from this perspective, we sold off, right? Look at how strong the support level looks. Here at 269, close to $3, 269, 280. Look at how strong the support is. Bounce here, had a double bottom there, bounced again, went under, right? But came back with a double bottom right under at this like 170 level. Came back above support, double top here. Well, it's funny, double bottom there, but double top, bigger picture. And then double bottom here, came back, and here we are again doing like a longer term double bottom. So overall, looking at this price action, this looks bullish. And usually, and I don't know if you guys, some of you have been here for a while, but I have said, when you look at this move here, big picture, you see this sell-off that's like 1, 2, consolidation. A lot of times that ends up going and reversing with the same kind of upside. So then you see like 1 up to like maybe $7 here, a little bit of a sell-off, 2, and it returns back to what this top was. And I'll draw that out for anyone that's confused by what I'm saying. But you've got 1. How do I continue this easily? I need to figure out this Robinhood Legends chart. There's got to be a faster way for some of this. Got 1, 2, and then you get consolidation. So I'll just pretend like yeah, this is inefficient. Surely there's another way. But then once you've stabilized, you start to curl back up, and then you kind of get that same thing towards the upside. This is what I see very often with this kind of pattern. So, and then, you know, you're heading up. This is kind of what I'm expecting, honestly, because we've talked about this already, but Archer Aviation and Joby both seem to be very, very good companies that are well established in this space already. They've got the advantage. There's some others as well, like Xpeng, but I'm really trying to focus on being a US citizen and being one that can track what's going on here better than I can track what's going on elsewhere. Companies that are really positioned to do well in this EVTOL sector in the US, and Archer seems real strong. Price targets are from $9 to $12.50, and we're sitting at about $4 right now. So there's so much upside potential, and obviously very strong support here at about $3. So with that in mind, buying at $3 to $4, I'm doing that all day, no hesitation. So I've got calls here. If we dip back towards $3, I will gladly buy the dip. That is just a discount. That is a sale. I'm buying. and I am holding, and I am hoping to be very wealthy off Archer within the next year to 2 years. So confident in that. All right, so that's what we've got going on for the stock market. Feel free to ask if you have any specific stock that you want me to talk about. But now I want to just take a quick look at crypto. So Pepe is doing very, very well today. I called out yesterday the fact that Pepe is now available to trade. And let me go back to the normal version. Pepe is now available to trade on Robinhood. So yesterday, Robinhood added a handful of cryptos that you could not trade previously. And so they added Cardano. They added, I think XRP was added. They added Solana, and they added Pepe. And I think there were one or two others that they added that weren't here already. But that's very bullish for those guys because being, Robinhood's probably the largest retail traders investment platform. Being able to get easy access to those cryptos is just a huge catalyst for them. And so I called out yesterday on Pepe that I was going to buy, which I did buy, and I bought at about 1.7 or 1.5, somewhere like right here. I did end up selling because I decided after that, my game plan, if I'm going to continue to plan my trade and train my plan and be disciplined, was not really to catch a meme coin move, even though there was potential. And I had only put in a couple $100, but I was just like, this seems like a gamble. If I lose more than 10%, I'm going to be annoyed. So why don't I just take my money out? And even if this goes up, I'm just going to figure out a way to throw, whatever capital I had going into this meme coin into a stock that I did already care about, like Tesla or Archer or something else. So I did sell my position pretty quick, especially because it didn't seem to gain steam as quickly as I thought. Pepe and a few other coins also got listed the same day on Coinbase, and it took a little while for the hype to really kick in, but it sure did kick in because we have moved up pretty significantly. So now Pepe is at about 2.4, 2.5 when it was at like 1.4. So almost double compared to yesterday. People that were holding that, you're probably very happy. And if you bought because you heard my signal that was bullish for Pepe, that's great too. But yeah, Pepe's moving. I have no interest in Pepe personally though. The only meme coin that I really care about, there's two. And my position on these things is I want to be involved in the cryptocurrency that's going to replace the US dollar in digital form. So we already know that Bitcoin is poised to be digital gold, which is like, yeah, you don't necessarily have to own it at all given times. Like today, right? We know that gold and silver are valuable, but do you own significant amounts of gold? Is that what your savings is? Just blocks of gold in your home? No, but we still compare assets to gold as a point of reference. And we also understand that gold is a really good store of value. Probably, it's a better store value than the dollar for inflationary purposes. That's kind of what Bitcoin is. It's the digital version of that. But it's like you've got to forget about this at some point because just like in day-to-day life, we're not thinking about gold very often. Day-to-day life, we will probably not be thinking about Bitcoin very often. It's not going to be the thing that's right in front of our face at all time. What is the currency going to be for exchanging currency for goods, for services? That is where smaller coins that are more accessible, that are cheaper to trade and send exchanges across the network, and that are really well known and popular come into play. And there's a couple from technical perspectives that seem to be well set for that. So there's Cardano's ADA, there's XRP, which is really solid. But then, the one that just keeps coming out on top is Dogecoin. And we've been talking about Dogecoin for this, Dogecoin for that for a long time. And, it's been a pretty good and fun joke over the years. But at this time, it's starting to become a little less of a joke when you have the Department of Government Efficiency, Doge. We've got this whole government efficiency department named after the coin itself by a fan of the coin. and now everybody knows about Doge and they understand the correlation. It's just kind of becoming like a self-fulfilling idea that this whole Doge thing is becoming a thing, a concept of the people for the people, I guess you could say. That's probably the easiest way to say it, which then just makes this the most probable cryptocurrency to become whatever our trading currency is going to be. Now, that does not mean that a Dogecoin has to be worth $1 or that it has to be worth $5, $10. It could be worth a cent. It could be worth 20 cents. It could be worth $20. Who's to know what we will decide to put the value on this coin as? But all I know is that it appears that this will be the one, which is, if anything, a bullish catalyst. So, like I said, there's no way to determine price based off that, but unless you really try to start getting into economics, and we spend a couple hours talking about what that could mean with demand, but for the time being, this looks to be the most probable coin to be our day-to-day used currency. In fact, I have my Tesla mug right here. And it's a little old now. That's why it's got some marks on it. I've got my coffee with my Tesla mug. And I purchased this from Tesla's website with Doge.